Hello, good morning. It's Monday the 23rd. I'm FX Blue and this is the market brief. So despite the residual strength of the UK employment market, there's a sense of inevitability about the economic slowdown. Leading indicators are slowing and there are growing fears that a recession will be almost impossible to avoid. Some analysts do see the latest 9% inflation data as the peak, but that could very well be wishful thinking. The Bank of England expects a higher at least 10%, and we're up 2% from March, 7% in March to 9% in April, so it's not exactly slowing down yet, is it? In the market, sterling remains largely on the back foot. We received a little bit of a boost last week as the dollar index continued to correct. This morning we opened the new week from around 125.45 against the dollar and about 118.45 against the euro. Over in the US, the Fed remains aggressive about their efforts to combat inflation, and that's despite evidence that price growth is slowing over there. We have data due for personal consumption expenditures. That's the Fed's preferred measure of inflation, and that's due to be unchanged at 5.25%. However, front-loading the rate hikes where they'll continue with 50 basis point hikes should mean that inflation will fall faster. The hikes may go over the neutral rate, which is currently estimated to be about 2 or 2.5%. But going over this will provide the Fed with a degree of flexibility next year, either to trim rates back to the neutral rate or possibly even trim them a little further below the neutral rate if the economy needs a little boost of support. Last week, the dollar index corrected with a bit of profit taking on the long positions, and the improvements to global risk appetite also helped push the index a bit lower. We touched a low of 102.65, although we did close the week back around the 103 level. Euro dollar kicks off the new week from just shy of 106 this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FX Blue.